Hello traders, welcome to my YouTube channel. As you are watching this video, I guess you know what we'll be talking about. We'll be talking about traps and how to trade them. So without wasting much time, as you can see, this is a bear trend. You can see how the market was falling down, pulled back, dropped, pulled back, dropped, pulled back again. At this point, you can see how the market rised above this high, as if it want to change direction. Then all of a sudden start falling down again. So that is a pure trap. But before we continue, let's go by the definition of a trap. A bull trap is a situation when traders put on a long position when the price of a currency pair is rising, only for the price to reverse and move lower. A bull trap is also known as a sucker rally. A bull trap fools some traders into thinking a market is done falling, and that is a great time to buy. So, as I said before, the market fell, pulled back, and rise above this high as if it has changed its direction. But all of a sudden, fools traders and start falling down again. Let's check in a bull trend example. You can see the market pushed up, pulled back, pushed up again, pulled back, pushed up, pulled back. You can see this bear candle, how it broke this low, fooling traders as if the uptrend is over. All of a sudden reversed up and started moving upward again. So at this point, it has trapped the bears who shorted immediately after seeing this candle, because they were thinking that the market is about to start selling. So they were trapped immediately and the market started moving upward again. So this is a typical example of a bear trap. The market trapped the early bears who were so eager to sell the market. It trapped them and started moving upward again. So I will take you on a step by step on how to avoid these traps. In order for you to avoid being trapped, this simple guideline can help you to avoid this trap. This simple 3 guidelines. Number 1, don't take reversals without a prior trendline break. 2, don't take reversals after a long wick bull candle in a bear trend. 3. Don't take reversals after a long wick bear candle in a bull trend. Going by this rule, as a trader, you could have avoided being trapped in this scenario because the market have not break this trend line, so you have no reason to be selling this market. Despite this bear candle that dropped, the market never break the trend line, so you wouldn't have been on this trade. Three, don't take reversals after a long wick bear candle in a bull trend. In this scenario, you shouldn't have taken this trade because long wick candles are indecision candles and are manipulative. So before you take any trade after long wick candle, you need an extra confirmation before you take any trade. So if you would have followed these rules, you wouldn't have taken this trade. So the same is applicable in a bear trend. The same is applicable in a bear trend. As you can see, the market, there was no prior trend line break. So for any reason, you don't have to take this trade because there was no trend line break. There was no trend line break that happened before this week, all these long wick candles. And secondly, they don't take the reversal after a long wick bull candle in a bear trend. So you see this long wick bull candle, you should have avoided this trade because, as you know, long wick candles are manipulative candles and they are indecision candles. So you knowing the rules, I will move you on a step by step on how to trade them, your entries, your stop losses, where to place it, and how to take your profits. When you see a long wick reversal bull candle in a bear trend without a prior trend line break, they are often traps which are perfect with trend short setups. So in this scenario, instead of you to trade this trap, you can wait, or you can even be looking for these traps in the market and trade them after they fail or after they must have trapped early bulls. So for you to trade this trap, you need to wait for this bull candle to close. So after the close of this bull candle, your entry will be below the low of the bull candle. As soon as the next candle goes below the low of the bull candle, that is your entry, and your stop loss should be placed above the top of the wick of the bull candle. And of course, your take profit, you can either trail it or go with 2 to 1 depending on your preference. So you can see this is the place, you place it here, your stop loss above the wick. Your stop loss above the wick, then you take profit 2 to 1 or you trail it, because I'm not a fan of trading 1 to 1. So your take profit should be 2 to 1 or you trail your profits. The same thing applicable in a bull trend. In a bull trend, as you can see, you enter immediately the next candle. You enter after the close of the trap candle. Immediately the next candle goes above the high in a bull trend. Immediately the next candle goes above the high of the trap candle. You enter and your stop loss below the wick of the trap candle. Then your take profit will be 2 to 1 or more. Going by this strategy, you can easily cash good risk to reward trades, because as soon as traders are being trapped out of the market, it keeps the market in one-sided, because institutions have manipulated the early bears out of the market. So we only have bulls in the market to take the market up without any form of obstacles and stress. I think I should give you guys the entry rules and stop loss with the take profit. So this is it. Entry 1. Immediately the next candle goes above the high of the trap candle in a bull trend. So entry immediately the next candle, which is this one, goes above the high, which is here, the high of this trap candle, you can enter. Then 2. Immediately the next candle goes below the low of the trap candle in a bear trend. Stop loss below the trap candle wick in a bull trend. Below the trap candle wick, this is the trap candle. Your stop loss should be below the wick below the wick, which is here. 2. Above the trap candle wick in a bear trend. TP, you go with 2 to 1 or trail it. Let's jump into the chart and see examples on the chart. As you can see, this market is a bear trend. You can see the market is falling. Market is falling down. This is a clean bear trend. So in this scenario, you can see how the bulls have been trapped in this scenario. Yeah, you can see how the market was falling. The early bulls as this candle, this bullish candle goes above the high of this one, but immediately dropped down again and started selling. At this point, it has trapped the early bulls who bought the market after seeing this bullish long wick candle rising up. They thought that the market want to change its direction and start moving up. So they bought this market and they were ended up being trapped because the market all of a sudden started selling again. If they have followed the rule, they wouldn't have been trapped because there was no earlier trend line break in this trend. There was no trend line break, so they have no reason to be buying this market. Let's move to another example. Look at another scenario here. Another scenario of the bulls being trapped. Here, the same thing equally happened here. The market deceived the bulls as if it's going up, but ended up falling down. At this point, you can short immediately. Price go below this long wick candle, which is here. Enter immediately. Price goes below there. And remember, your stop loss is above the long wick candle, and your take profit should be 2 to 1 minimum, or you can trail it. The same thing happened here. You can see this candle goes above this swing high, but suddenly reversed down, trapping the early bulls who bought this market without a trend line break. They were buying in a bear trend, which is a very, very wrong approach. So at this scenario, your entry is immediately price go below the low of the candle. Immediately price go below the low of this bullish candle with the wick. This candle, your entry should be there, and your stop loss above the top of the wick. Let me place it there. Entry here. Immediately the next candle goes below the low. Enter. Stop loss above the wick. Then take profit 2 to 1 minimum, and you can trail it. Look at how you would have easily cut this trade 2-to-1 minimum, or you trail it. The same thing equally happened here. A clear bear trend. Market trapped the early bulls who thought the market was reversing by this long wick candle that went above this high. But immediately the candle went above this high, it closed the long wick and started selling down again. Let's check another pair. So you can see it's a downtrend. Market was falling. It was falling down pretty nicely. Market was falling down. But early bulls who were so eager to buy this market thought that the selling pressure was over. So immediately they saw this long bullish candle that went above this high. They entered and started buying, and immediately they were trapped. And the market fell down. At this point, you can place your entry at the low of the long bullish candle and your stop loss at the high of the candle. Minimum 2-to-1. The same thing happened here. There was no prior trend line break in this market, but the early bulls were so eager to buy this market, so they ended up trapped. Because this candle rised as if it has ended the selling pressure, but suddenly the price reversed and it started selling again. You can see how the candle goes above this high but was unable to close above the high, then fell and reversed immediately. At this point, you put your entry at the low of the candle and your stop loss above the high of the candle, and your take profit should be 2-to-1 minimum. 2-to-1 minimum. And that's how you would have easily cut this trade. Look at it. One thing you should know is that immediately price trapped, because who are the people trapping the traders? They are institutions, so they don't want you to know their direction, so they will first of all manipulate traders by trapping them out of the market before going to their preferred direction. So whenever you see this trap, it's very easy for the market to move your direction 2-to-1, because you can see the aggressive move that happened here just after the trap. The same thing applicable here, the aggressive move that happened just after the trap. We have been checking bearish example. Let's equally check bullish examples. Yeah, I can see a trap right now. So you can see this market is going up. You can see how a price pulled back, and this bearish candle went below this low, deceiving traders as if the bullish trend is over. All of a sudden it reversed up. At this point you can enter immediately. Price goes above the high of the bearish candle, and your stop loss below the wick of the candle. Remember, your take profit minimum 2 to 1. And that is it. Let's check another example. You can see another trap here. The market is a clean uptrend. You can see how the bears pushed this market down, thinking that the uptrend is over, and they ended up being trapped. The early bulls that entered this market, seeing this long wick bearish candle, they were trapped. And the market reversed up immediately. So the examples are so many. The same thing happened here. This long bearish candle, this long wick bearish candle went below this low, deceived traders as if the bullish trend is over, but immediately reversed up and continued the uptrend. You can put your entry there at the top. Immediately the next candle goes above the high. Your entry there, stop loss below the wick, and your take profit minimum 2 to 1. Let's check the last but not the least. The same thing happened here. So you can see the price pushed up in an uptrend, but this long wick bearish candle pushed down, deceiving early bears as if the uptrend is over. So they shorted, but we are trapped because the market immediately reversed up and started going up immediately. Put your entry, immediately price goes above the high of the bearish candle, and your take profit 2 to 1 minimum. Your stop loss below the wick. So that is how you should be trading traps. So if you enjoyed this video, I want you to like, share, comment, and don't forget to subscribe for more videos like this. Thanks.